Hi there, a very good morning, good afternoon to all of you, depending on wherever you're hearing me. This is simply stocks, and I'm here with another video. So, this video corresponds to an interesting consumer company that has come out with decent numbers, as well as about the markets as to how the markets are doing. So, let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do it with their own due diligence and research, and I'm not in favor or against any company that I talk about. I'm not a member of the NEC and BSC, and that I'm not an official portfolio advisor. So, whatever discussions I have with respect to the markets or stocks are purely on the basis of my experience over on in the market over the last 12 13 years that I have been investing trading into the market. So whatever decisions with respect to investments or trading you take, kindly take that on note that it is laden with market risk, and kindly do consult your financial advisor. Before I talk about the company as well as the markets, here's a small request. Kindly support me on Patreon. Once you do that, help me grow the channel. Help you also ask me questions, seek out answers in greater detail. Once you get the $10 membership on a monthly basis, you get access to my portfolio, a comprehensive watch list which I update monthly, 2 weeks to 4 weeks time, analysis on different companies, discussion on domestic and global economy, whatever that is happening globally and how it's going to impact the markets, and whatever queries with respect to the markets you're having, I'll answer that. So you can become a member on Patreon, or you can become a member on WhatsApp as well if you can email me for that. In order to understand about the Nifty first, let me take you to the trading website and about the company. So the company in question that I'm going to talk about is Dodla Dairy. So this has come out with decent numbers, and the stock hasn't moved that much. So we'll discuss about this. But first, the Nifty. So the Nifty is currently at around 24,380 levels or so, and is doing well with the prospects of Donald Trump coming back in the US. The markets are doing well. But I feel that we are not out of the woods unless we close above 24,400. So let's see how things go about today. Second point is, in terms of the downside, if you see here, and this is a 1 year chart of the Nifty. If you see, then in the election, on the election day, the market just before the election day on 3rd of June made a high of 23,340. On the election day, the high was 23,180. So around 23,200, I feel, is the worst case scenario that this market could go to. So a 1,000 point downside is very much possible, but the upside is pretty big. So there are a lot of numbers being thrown around with respect to the Nifty earnings. So what I understand is for FY25, people were projecting earnings of around 1150, 1160 rupees. They are going to be around 1100, maybe 1110, but let's say 1100 rupees for FY25. Now, FY25 is just about 3 months, 4 months from here. Yes, the December quarter numbers would come in, and then the March quarter numbers would come in. But people on the streets do have idea as to how the Nifty earnings would be on a ballpark figure level. Now 1100, if 1100 is the FY25 numbers, and if I extrapolate that up, if we say that the inflation is around 5.5% today, and we have a situation where the GDP growth, let's say GDP growth is around 6% or so, even then it's not 7, let's say 6%, even then 11.5% growth is very much possible. If I include even half a percent jump in margins, we are looking at 12% increase in terms of earnings. That's what I'm looking at for FY26. People are projecting 15, 18, 20%, but let's go with 12%. So even at 1100 rupees, if I take 12% growth, then we are looking at 1230 rupees of EPS for FY26. Based on that, let's say the market is around 24,300. We are not ultra expensive. We are trading at just under 20 times 1 year forward. The growth is around 11-12%. Yes, slightly higher, probably 1.5 percentage point lower, we would be fine. So if I consider that the market do dive towards the 200 EMA, which is 23,500, based on 1 year forward, we'll be trading at 19 times. And if we go to 23,100, based on 1230 rupees, we'll be trading at 18.8 times. And if you remember about say 1.5 years back in March of 2023, when we bottomed out around uh, 18,800 levels or so, and we were trading at 18.8 times, or somewhere around that. At that point of time, we bottomed out at such valuation. So 23,100 is the downside. Now what is the upside? Suppose that we have a decent rally over the next 1.5 years, then on FY26 basis, as I said, FY26 we are looking at 1230 rupees of EPS. Normally, a market stretches to 24 times. Let's say we go to 23.7 times on that basis. We are looking at 29,000 on the Nifty over the next 12 to 15 months. So the upside is 29,000, the downside is 23,300. So we are looking at a situation where the upside is around 5,000 points and the downside is 1,000 points. So 1:5 ratio. That is why I was saying that just about a week, 2 weeks back, that we are very close to a bottom. Even if we are not close to a bottom, then uh, these are decent levels to get into the market, because maximum downside from here, when I was talking about it, it was around here. And so just yesterday we made a low of 23,800. Maximum downside from 23,800, which was the latest low, is around 500 to 700 points. That's just about it. So that's why it's good to get into top quality companies which are doing well, especially in mid and small cap. People are talking about mid and small cap not doing well. We'll see how that goes, because at the moment it's not trading at ultra expensive levels. If I tell you, the small cap index is currently trading at around 33 times. So you can easily find that out if you can search BSC small cap screener. Then on the screener website you do get a PE ratio etc of BSC small cap, which is trading at 33 times. So the PE ratio currently is around 33 times. Earnings are coming through. In the next 2 weeks we'll understand how this PE shapes up. But if you see from a 5 year perspective, the PE average is around 34.5 times, and we are trading at 33 times. So this is again not ultra expensive. Normally it stretches to around 40 times, 45, 48 times. You look at here, January 22, when the markets were in a euphoric zone recently. I mean, before that fall of 2023, the PE expanded to 48 times. So that's how things go. In 2023, when the market fell by March, we were trading at around 22 times or so. So if we see here, we were around 22 times. So from 22 times, we have gone up to 33 times, but the euphoric levels is around 45 to 48 times. So that's why I believe even the small caps are not ultra expensive. They are not cheap. Of course, if they come to 25 times, 22 times, then things will become better. But they are not ultra expensive as we see from these charts, etc. So one of the companies in the small cap domain is your I'm sorry. So that company is Dodla Dairy. The company was incorporated in 1995, and it is an integrated, you can say, dairy company based in Telangana. And the company derives the majority of its revenue from the sale of milk and dairy based products. So this is a company that is similar to other kind of companies that sells dairy products, milk, etc. The revenue mix is 72% milk. Value added products is around 23%, which they are increasing the share of, and fat products is around 3%. In terms of geographical split, India corresponds to 94% of their business. That's the major business that they are deriving their business from majorly from India. 7,000 crore market cap company trading at 32, 33 times. A consumer company trading at 33 times, growing at 25-30%. Looks pretty good. On the profit front, they are growing at 25-30%. Just to give you a snapshot of their numbers this time around. So in September of 2024, what they ended up doing is that they did thousand nearly 1,000 crores of sales on a consolidated basis, and 96 crores was their operating profit versus an operating profit of 70 crores. So a decent jump of around 33% or so in terms of profitability. In terms of sales as well, if you look at it, around 230 crores of sales jump, so around 30% sales growth as well. Very decent company, looks really good from a 2 to 3 year perspective because their expansion is going on, and after expansion, the capacity will expand, and numbers will become even better. So if you look at here, from 2000 crores in FY21, they hit 2200, then 2800, and we are projecting that they could end up doing somewhere closer to 4000 crores, 3500, 3600 will go up. In terms of shareholding pattern as well, we are seeing that 60% shareholding is with the promoters, 11-12% is with FIIs, which have been increasing. And considering the way FIIs are selling at the moment, if FIIs are not selling in some of the companies, that will tell you the pedigree of those companies. So here, slightly the FI exposure has increased, and if you look at the DI exposure, decreased a little bit, and public shareholding is just about 10.5-11%. Even in that, there are large investors invested, or top investors invested, so around 5.5-5.5% is with the large investors. Only 5%, 5.5% is the free float, and that's why the stock moves gyrates in a large, you can say, band. So it is a slightly illiquid stock, but a 7,000 crore small cap company that looks decent from a 2-3 year perspective. That's Dodla Dairy for you. So this was a video on the markets as well as some of the stocks. Please like and subscribe my channel, hit the bell icon so you can get my video straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.